Today's podcast guest, Ben Cowen, a legend and OG in the Bitcoin space, is showing us where Bitcoin might actually go in 2026. And it is very different to many of my other guests. This is a deep dive where Ben Cowen and I are diving into all of his charts and seeing what Bitcoin is actually doing in 2026. Enjoy. Give us a brief overview for the few people that might not are aware of you, of who you are, and especially why you're excited about Bitcoin.
Did my undergrad in mathematics. That's where I first learned about Bitcoin. We got to take like electives, and I took a cryptography class. Got really interested in. So when I first got interested in crypto, it wasn't even Bitcoin. It was just cryptography in general. But then that eventually led me to Bitcoin way back then. And then I got really interested in it when I went to grad school. I did a PhD in nuclear engineering, and a lot of the other grad students in my group were interested in Bitcoin as well. So we would talk about it fairly frequently and watch the market cycles. And a lot of us got wrecked. We made money. Like it just kind of, 1 year you get wrecked, another year you make money. So we kind of went through the cycles together for a little bit, and then I did a postdoc in high energy density physics. And I remember I went to this high energy density physics conference in Portland, Oregon back in 2019. And right after I gave my presentation, I went upstairs to my hotel room and then started the YouTube channel. And I just started talking about the markets. And, for like the first 6 months, no one really cared. And I think I had like 100 subscribers for a long time, for a while. And then the Fed printed $6 trillion and everything changed, right? Everything changed. So that's kind of how I came to be here. And eventually I quit my job as a scientist at the lab. And then now I just simply do this full time.
That's freaking awesome. I love that. I'm just curious how you see, because I see so many different people. I had like over 700 now on the podcast, and they look at Bitcoin from various different lenses. But it's really interesting because you have a very math-heavy, physics-heavy, science-heavy background. How you uniquely look at Bitcoin and how your perspective might differ from other commentators or like educators in the space that you see.
Yeah, I think it is somewhat different. It's mostly not dependent on like traditional technical analysis, right? It's more so dependent on looking at macro trends, sort of data-driven insights rather than drawing lines. And so I'm not saying I'll ever do that. I just think that there's more to analysis than traditional technical analysis. There's a lot of other things you could do, and so I tried to bring some of that stuff from traditional markets over into the crypto space.
What are kind of the most important things, the indicators, charts, or like metrics that you usually watch in Bitcoin?
Yeah, there's a lot. I could talk maybe about the ones I'm looking at the closest right now, given the fact that I think we're in a bear market. I know not everyone would agree with that statement, but if you show my screen there, so this is the year-to-date ROI of Bitcoin. And what we're going to do is we're just going to look at 2026, and we're going to compare that to the average of prior midterm years. So when you look at it, and we can even add on one standard deviation to that average. So when you look at this and we zoom in, Bitcoin really is just tracking the average of prior midterm years. Like it feels like this cycle is different, but in terms of just the year-to-date, the ROI from the yearly open, this is what we always do at this point in midterm years. On average, by day 71 in the year, approximately, Bitcoin's ROI from the top is 0.788, and today we're at 0.787. So it's basically doing what it always does. So that's one indicator. I think some other indicators that are worthwhile to look at, especially in a bear market, is one of them is the balance price. So Bitcoin historically in bear markets will bottom below the balance price. You can see it in every single bear market. That is where Bitcoin ultimately found support Here's 2015. I already showed you 2011, but there's also 2018 as well. And then you can see even in 2020, right? That's where we bottomed. Also in 2022. And then the balance price right now is closer to around 40K. So if Bitcoin were to go to 40K, then a lot more of these indicators that people have relied on for so many years would start firing off. You could also look at something like the supply of Bitcoin in profit or loss and see that historically the bottom occurs after the two lines converge and cross each other, which they haven't done yet, right? They haven't actually converged yet. But you have to imagine if there were another leg down a little bit later on this year, you would likely see these two lines converge. You would likely see us potentially hit that balance price, and perhaps the cycle will play out how it typically does. Even if you measure the ROI of Bitcoin from the peak, and you just look at the purple line, which is this cycle, I mean, it's pretty much doing what it usually does. I mean, and we can even average out the last 3 bear markets as measured from the peak. And this one has been a little bit more elevated. There hasn't been as much drawdown this cycle on average, but I think there's 2 reasons for that. The first reason is we have diminishing losses from one cycle to another, right? In the bear markets. If you look at Bitcoin, every bear market has been a little bit less dramatic, right? Like the first one was 93, 94%. The next one was 87. The next one was 84. The next one was 77. I'm thinking this one maybe around 70%, plus or minus 4%. Seems about right to me. So that'd put us between a 66 to a 74% drawdown. That seems like a reasonable drawdown for Bitcoin to have within the confines of a bear market, right? So the only difference, like the only thing about this cycle that was different from other cycles is that we topped on apathy rather than euphoria. That's the only difference. And the reason why we topped on apathy rather than euphoria, in my opinion, is because we are in more of a late business cycle regime. So, and feel free to just stop me because I'll ramble forever. But if you look at the social interest in crypto, it's really low right now. And you can see that it's basically been trending lower since May of 2021. There just hasn't been an influx of new retail investors into the crypto space, which explains why there was not a durable rotation from Bitcoin into higher risk assets, right? There was no alt season, as people call it. There was no rotation out of Bitcoin into higher risk things because we topped on apathy, right? You can't expect higher risk assets to go parabolic when literally no one is here to buy them. And the only other, if you can look at Bitcoin's price and you can color code it by the social interest, the only other time in history this ever happened was in 2019, right? Where we had that was a mid-cycle top though. We topped and then Bitcoin dropped. And after Bitcoin topped, there was not a rotation into altcoins. And so the reason I don't think there is a rotation into altcoins has to do with monetary policy, and it has to do with where we are in the business cycle, right? And we got a little glimpse of that previously. I have this business cycle chart here, which is basically made up of taking the S&P 500, dividing by the unemployment rate squared, multiplying by interest rates, multiplying by the inflation rate year over year, and then normalizing that by M2. And you can see that basically for all of Bitcoin's history, we were not in the heights of a business cycle, right? In a major bubble. This was relatively flat. We got a glimpse of this back in 2019 when Bitcoin topped on apathy, and then and we came back down. There was no rotation. We're seeing the same thing this time. It's just taking place on a much grander scale. The other thing to remember is that this similarity to 2019 is that when Bitcoin topped in 2019 in June, it was 2 months before quantitative tightening ended, just like Bitcoin topped in October of 2025, 2 months before quantitative tightening ended. So right now, I think we're kind of in this drawdown phase after the apathetic top. And I think that drawdown phase will last, I think 2026 will be a bear market year.
There was a lot in there. Thank you so much for that. Apathy, just for me, for my bad English skills, it's a lack of interest, basically, right?
Yeah, basically just means people aren't here, people don't care.
And so this kind of is another indicator for like this last bull market to 126K or however you want to call it is more driven by institutional adoption and less by retail.
Yeah, I think that would be a fair assessment. It's been more so driven by institutions and also potentially people buying the ETFs that maybe didn't get in previously, but it's not really being driven by a huge influx of new retail investors. As you can see that, and there's actually the social metric here is made up of a lot of different things, but one of the things it's made up of is people viewing various YouTube channels that talk about crypto. Right. So just a lot of different, maybe 20, 25 YouTube channels that are generally talking about crypto. And you can see that, back in 2021, these channels were collectively averaging 3 to 4 million views a day at the peak. Whereas today they're averaging around 500 to 600,000 views a day. So, we've essentially seen almost, not quite, an order of magnitude drop in viewership to a lot of these different YouTube channels that focus on the crypto industry. So that's kind of evidence right there that people just haven't really been tuning in as much. They don't care as much about the industry at the current time. I think that'll eventually change, but that's where we are right now.
Do you see actually a difference? I don't know if you tracked it even between crypto and Bitcoin channels.
I don't know for sure because I don't watch enough of the channels to know like who's talking about what per se. I mean, I could, and I also don't really want to pick on anyone, but I can show my own channel. So this is my channel. So you can see that I definitely had more viewership back in 2021 and 2022, early 2022, than I've had really ever since. I mean, it's not like I'm not getting views. I am, but it's still, I have more subscribers today than I did back then, but I'm getting less viewership, right? So there's less tourists in the space, right? There's less people that are just kind of popping in because they're FOMOing in about missing this rally. There's less of those people right now.
And this is actually something I hear from almost all of the content creators that have been in for longer. Like I started in like 2024, so I've started like way after that. And most people told me, you haven't been through a bull market. Most people tell me like you haven't been through a proper bull market that we had in 2021 or 2017. Beyond probably also.
Right.
It's kind of like this is also kind of what you're showing here, where like most of you were there.
What year did you start your channel? What year did you say?
The channel officially started 2020, but like I started making serious content 2024.
Yeah, so I started my channel around this top right here. It was actually, I think it was technically like right before the final rally. I started it kind of like in that area. I started my Twitter.
What year is that?
2019. Yeah. So you're basically starting if you started in 2024, you kind of started here, right? So we actually started at very similar times in the cycle, in the sense of like we both started arguably in a late business cycle environment where Bitcoin was kind of topping out on apathy and there was not this rotation into higher risk assets. So basically it was the tight monetary policy bull market where where Bitcoin led the bull market and most other things kind of bled out. So I would say you have experienced a bull market, but it was a bull market characterized by relatively small leadership, right? Just Bitcoin, kind of like 2019, right? It's kind of like you haven't really experienced this type of a bull market, I guess.
And so you are expecting this kind of a bull market to come back to Bitcoin and crypto?
I think it eventually will, but I don't think it'll happen this year. I think this year is a digestion phase for the crypto space. I think prices will drift lower as the year goes on, even if you have, some short-term counter-trend rallies that make people believe that other things are happening.
You showed something like a balance price. What is balance price?
Let me see if I can pull it back up. So So yeah, so here is the balance price, and so it's actually, I mean, there's a lot of different metrics you can look at. There's the terminal price, there's the realized price, and there's the balance price. So the terminal price is where Bitcoin normally tops out in a euphoria phase, right? You can see that's where it topped out in all the prior euphoria phases, but it did not hit it in 2025, similar to how it did not hit it in 2019, right? Um, so then normally what Bitcoin does is it then goes down to the realized price. So first of all, the terminal price is equal to 21 times the transferred price. And the transferred price is equal to the cumulative value days destroyed, which is price times coin days destroyed. It's kind of like if I tell you the definition, I then have to tell you the definition of like 10 other things. um, but it's basically built on a lot of on-chain metrics. And so the balance price is just equal to the transferred price minus the realized price. And so when you carry that out, you essentially just get this yellow line. And historically, that is where Bitcoin has in fact bottomed, which is why I think it's somewhat premature to call for a bottom right now.
And so I think a lot of people call like the Fourier cycle dead, which you kind of showed in the previous 15 minutes that is kind of not true. Like people like it's clearly behaving as it behaved in the previous cycles, and it might just be not based on like a hype. We didn't have a blow off top in the Q4 to like, right, I don't know, 150, 160K or 200K, but like it behaves quite similar than it always does.
Yeah, if you look at the length of the last cycle as measured from the low to the high, it lasted 1,062 days. The cycle before that one lasted 1,059 days, and the cycle before that one lasted 1,068 days. So basically, the cycle length was within about a week of the last two cycles' length, right? So it doesn't, to me, it doesn't make sense that the 4-year cycle died just because you didn't have a rotation into altcoins. The cycle lasted as long as it normally does, and then if you extend this chart out to the next low, you can see that we topped basically where we always top, and then we go into the bear market where we always go into the bear market, and then eventually Bitcoin bottoms out. And if it bottoms out in a similar length of time, it would put the low somewhere around October of 2026.
I ask myself a lot why this Fourier cycle is even here. I mean, we had the halving, but now the halving, now we have, I think, just like a couple of days ago, we mined the 20 millionth Bitcoin. So the halving does not have such a huge impact now on the supply. And I think we have Seyr that buys twice the new supply a day. He buys just per day with the stretch product now. Why is this Fourier cycle like still a thing?
I don't really think it's based on the halving. I mean, I agree. I think it's based on liquidity. It could be based around the presidential election cycle. It could be based around a lot of different things. But proof that it's not based around the halving is that traditional markets often bottom approximately every 4 years as well. I mean, you go back to the 80s, the 50s, 60s, 70s, and 80s, and look at this. You had a low in 1982 and in 1978 and in 1974 and in 1970 and 1966. And 1962, and it just kind of goes on and on and on approximately every 4 years. Even if you go to recent times, you'll find there's lows approximately every 4 years, right? There was a low in 2022. There was a low in 2018. Now we took that out in 2020, but that was also due to the pandemic. But you can see how there's these lows that occur approximately every 4 years. Sometimes things change, but usually it takes a recession or some type of massive, geopolitical event to really get things off of that 4-year cycle. It's not that it won't ever break. I'm sure it will eventually break. It's just that I think people are going to get wrecked much more frequently by assuming that it is breaking than if they just defer to the 4-year cycle. I mean, imagine in the 50s, 60s, 70s, and 80s, how many times you would have been wrong if you thought the 4-year cycle was going to break, right? I mean, here at a low here, and then 4 years later, and then 4 years later. And the list just goes on and on, right? So you had, how many is this? This was, so you have 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 cycles in a row where the bottom was approximately every 4 years. And then it broke in 1986, where there wasn't really a drop, right? You can see that probably there were people that were betting on the 4-year cycle back then to play out, and then it didn't. And then a lot of people FOMO in, and then we got the crash the next year instead. But yeah, I mean, the 4-year cycle, Bitcoin does not have a monopoly on the 4-year cycle. We've seen it in other markets as well. I just think that the halving is one such narrative that we can look at, but I think that Bitcoin's price action does not solely depend on the halving.
So it's more like liquidity, the macro picture, the business cycle, and all of those kind of factors together. And yeah, like the halving itself might just be like one very small variable in that.
Right. Yeah. I'm not saying the halving has no effect. I think it probably has some, but I don't think it's the major driver.
I was just like always curious, like this cyclical nature of Bitcoin. What do you what do you think about the supercycle theory?
I mean, I don't really put a lot of faith into it. I think that it's a good thing for the asset class to go through these bear markets every few years because it cleanses the space and it allows the space to mature and for the people in the space to mature. Because the reality is a lot of the people in the crypto space, they got into investing through crypto, right? Like they got here through crypto. And so many people never really learned, great investing principles. They just didn't because they've always just been buying meme coins and that kind of stuff. And so I think having this sort of more difficult bear market where things just, especially the altcoin market, hasn't really been moving in so long, I think it actually is a good thing for the industry because it will lead to less malinvestment of capital and better investment of capital into the parts of the market that deserve it, rather than the meme coins and all the cash grabs and the scams and that sort of stuff.
It's interesting because those market cleansing things lead to less FTXs, Celsiuses, and like in general just crypto scams because the space is kind of getting mature. If I understood you correct.
Right. I mean, imagine if we didn't have a 2022 bear market, then you could argue that companies like FTX and Celsius would have gone unchecked for many more years. A lot of people would have gotten on those platforms and a lot more people would have lost money than already did. So I think by having this cleanse every few years, while it sucks, it also helps mitigate future disasters, right? It helps people learn what works, what doesn't. And so it sucks if you're one of the people that lost money. But imagine if you had 4 more years of people going onto those platforms. I mean, imagine how much more money could have been lost. So I think having this every 4 years is a good thing.
If you live in Europe like I do and want to buy Bitcoin the right way, check out Relai. Relai is a Bitcoin-only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works, buying Bitcoin on a consistent basis. Relai is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug pulling whatsoever. I have been a long-term fan of Relai, not only because it's incredible, easy to use and very beginner friendly, but also because it just works. If you want to get started with Relai today, click the link down in the pinned comment or in the description. And once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relai app and get cheaper Bitcoin if you use code Robin. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi. And how you look, because I usually always just focus on Bitcoin, and I'm not super into other assets at all. I mean, here and there, treasury companies, here and there, some other crypto projects, but like 99% of my focus right now is on Bitcoin. I'm in two things interested. The first one is kind of like altcoins versus Bitcoin, and then we can maybe later talk about treasury companies.
Yeah, I mean, I think altcoins have been a pretty terrible investment for like many years, right? I mean, you could argue that for the last 5 years, altcoins have been pretty bad investment. You could look at this chart right here and see that. I mean, if you look at total 2 minus USDT divided by Bitcoin, altcoins have been bleeding against Bitcoin since like January of 2022. Now, one of the metrics I track a lot, right, is Bitcoin dominance. And that one has been going up for years now, right? I mean, really since May of 2021 or so, Bitcoin dominance has been generally trending higher. Some people have pointed out that recently it's starting to struggle, but this includes stablecoins, right? I've approximated it on TradingView, Bitcoin dominance excluding stablecoins. And you can see that it actually just continues to go up, right? So the reason Bitcoin dominance on TradingView, the main metric, has not gone up is because the stablecoin dominance is going up. But if you ignore stablecoins, Bitcoin is still reclaiming more and more market share. And I think it should. I mean, I think it will likely continue. And one of the reasons I think it'll continue is just because interest rates remain high. I think they're above the neutral rate, which I'm approximating as the 2-year yield. And in that case, you usually see high risk assets continue to bleed to lower risk assets. So I don't really think altcoins have been a great investment for many years. And I think that will likely continue at least through the rest of this year. And the other thing to look at that really confirms this view is if you look at the advanced decline index of the top 100 cryptocurrencies, that's been trending down since 2021. So the bull market that we had was basically due to narrow leadership. It was only a few cryptocurrencies that were actually going up, while most of them went down. This is similar to what we saw back in the 2018 bear market and even in 2019 and early 2020. And the bull market that a lot of people remember, and the one that you have not experienced yet while having your YouTube channel, is where the advanced decline index of the top 100 cryptocurrencies was going up for a long time, right? So it's just been going down since 2021. And again, this is just further proof that altcoins have been a pretty bad investment. I'm not saying you won't ever see money come back into some of the altcoins, but they really have been a terrible investment. And I think the people that are kind of that push back on these ideas are just kidding themselves, because yes, there's always a few that do well, but that doesn't represent the larger market trend.
Do you have an opinion on where Bitcoin dominance will trend long term, like 10, 20 years?
So I think Bitcoin dominance will put in a new high within the next couple of years. Like, I think it will go back above 66%. Beyond that, it's really hard for me to say. The one thing I will note, though, that's hard to ignore is the low that Bitcoin dominance set in 2018 was at 35%. Now, think about all the money printing we had in 2020 and 2021, and interest rates were, effectively at zero. And despite all the money floating around, despite the fact that interest rates were at zero, and despite that stable coins made up a much larger part of the market back then, Bitcoin dominance was still unable to go to a lower low than where it was in 2018. So to me, what that means is that Bitcoin dominance is starting to trend back up, right? Like I'm not saying it can't ever drop again. I'm just saying I don't expect it to go to a new low anytime soon, right? Like it seems like it's generally trending higher. And you could have a scenario in the future where it drops for a little while, kind of like it has been. But that's actually similar to how it dropped in the 2019 cycle as well, where it dropped, but it wasn't dropping because altcoins were doing so much better than Bitcoin. It was dropping because stablecoin dominance was going up, and it was dropping because Bitcoin was just simply dropping quicker than the altcoins because the altcoins had already gotten annihilated in the bear market and in the Bitcoin only bull market. So altcoins effectively, many of them are actually closer to their 2022 lows than their 2021 highs. So I think that you'll see that happen in some cycles. And there's actually a great example of this if you look at the Russell against the NASDAQ. Like the only time in history where you could look at this chart and say that the Russell started to really outperform the NASDAQ for a long time was going into the dot-com recession, right? So the reason why the micro cap companies started outperforming the blue chips in the recession of 2001, it wasn't because the micro caps were going up. It's just that they hadn't really done anything for several years already. They'd already dropped 90%. So by the time the blue chips started to fall, they ended up falling more than the smaller market cap things. So it looks like the smaller market cap things were doing really, really well. But in fact, they were mostly dropping on their USD pairs. They were just dropping not as fast as the blue chips because they already got annihilated against the blue chips in the years preceding that bounce.
Interesting. I have a theory, and I don't know how accurate it is. I feel like Bitcoin treasury companies, specifically like Strategy, Metaplanet, and maybe Strive and some others, are stealing serious funder from altcoins, because a lot of the talk around, I want to, like a lot of the narratives that I heard from people investing in altcoins was, I want to invest in altcoins to get more Bitcoins. And I hear now a lot of that same narrative again from treasury companies. I invest in MSTR because over 10 years I want to get to more Bitcoin. Is that kind of like a fair assumption where the just pure number go up crowd might just look at, instead of altcoins, now more into like stocks again and staying kind of in the Bitcoin ecosystem?
I think there's probably some validity to that. I mean, I think a lot of people are also just tired of getting rugged on a lot of different things. And, like, it's not that if you buy Bitcoin, I mean, it can go down, right? And I think it probably will because I think we're in a bear market. But with Bitcoin, you don't really normally have to worry about, getting rugged 99.9% overnight, where the founder just kind of takes off with the profits and leaves you holding the bag. So I think a lot of people, like, I've always been a believer that over a long enough period of time, like, markets will eventually kind of regulate themselves. So when Gary Gensler left, there were a lot of people that sort of cheered that on. But in reality, that ended up marking a major top in the crypto market, right? January 20th of 2025. And in a lot of metrics, that's when the crypto markets topped out, right? Like if you measure crypto's performance against other things like gold and against other currencies, it didn't even put in an all-time high in 2025. So I think the problem is that when Gensler left, and then you had everyone basically launching meme coins, it kind of exposed the industry for what it had become. And I'm not saying that Bitcoin falls into that category. I'm just saying that Bitcoin can be a great asset, but it still attract people that want to use Bitcoin to enrich themselves through somewhat nefarious means. And I think that's kind of what happened. And I think it made a lot of people like myself somewhat disenfranchised with the industry as a whole, because I'm like, this is not what I remember it feeling like in 2011 and 2013 and 2015 and 2017 and 2019. Like, it feels like it had morphed into something different. And so I think that we had the meme coin craze, and a lot of people got wrecked trading that stuff. And now it's not like we have regulations saying that you can't launch meme coins and you can't trade them, but yet a lot of people aren't trading them anymore. And the reason is because they learned their lesson over and over and over again. And now they know that if they go fall for it, they will likely get wrecked. And so the market has effectively regulated itself in a sense. I'm not saying that you won't ever see meme coins come back. I just think that a lot of people in the industry today are tired of that side of the market and want the market to be more serious.
So, so you feel the starting of crypto and Bitcoin was kind of like different, and is it for you now? How do I say that? Are you still excited about any altcoin projects at the moment, where you still feel like the same excitement as you might have felt like for Bitcoin and some early crypto projects in like 2011, 12, when you like said like it felt different?
I mean, right now, I'm not really looking for that. I'm just kind of hoping the market continues to unwind for several more months, and later this year, I will take a look at what's left in the destruction of the midterm year, and then see at that point in time. But right now, I just don't think that higher risk. I mean, in a late business cycle environment, higher risk assets tend to perform very poorly. And there's actually a really interesting chart I can show you. Let me share my screen again. So if you look at this, this is the it's like a liquidity risk metric that I made, and like liquidity has been pretty tight for a while, and so the time for higher risk assets will be after this liquidity risk metric resets down to the lows, right? When it resets, that I think will be a much better time to look at higher risk assets if you're going to. Now, if this metric resets, that doesn't mean you need to go buy altcoins. But if you are someone who wants to go buy altcoins, then the time to do so would be when this metric resets back down to the lows, not while it's trending down, in my opinion.
What does liquidity risk mean? It's like an invert of like how much liquidity is there.
So it's basically derived in this case from looking at policy rates, yields, dollar strength, central bank liquidity, and funding stress proxies. So it's a combination of 5 different things, and it takes all those things into account. And it's this is one of those things that sort of suggests that liquidity is still relatively restrictive and that we are in a very tight regime. And this is why so many people, I think, messed up looking at the money supply and thinking that Bitcoin would follow M2, but Bitcoin doesn't do that. Bitcoin historically always tops out before M2 tops out, and so yeah, that's what it looks at. And so I think we are in a late business cycle environment, and I think after this thing resets back down to the lows, that's when you would want to start taking on probably more risk in higher risk assets. But I still think it's premature right now.
So there's no there's not a lot of correlation between Bitcoin and the overall money supply M2.
No, no. I mean, in the middle of a bull market, they both go up, right? But that's because M2 generally goes up, and risk assets generally go up. But in a lot of ways, Bitcoin tends to top out well before the money supply does. Like, I don't know if I still have it on here. I might actually have it on my website. So let me see if I have it really quick. So money supply, do we have M2 on here? Maybe we don't. I thought we did, but I maybe it's just under a different thing. Let me see if it's on TradingView. That there was one here. Yeah, the issue is that they got rid of one of the symbols. I could probably just pull up the M2 supply in the United States, and this is an example where, like, in 2022, M2 topped in April, right? But had you waited for M2 to top to then call the top for Bitcoin, by that point, Bitcoin had already dropped to $30,000, right? So this is a great example of why using M2 is not a great indicator. In a bull market, they can both go up. But I think Bitcoin tends to top before the money supply tops. I think Bitcoin is more forward looking. And what's really interesting is there's a lot of people that will say that Bitcoin is like, you know, the best asset ever. And I think it is a great asset, right? I'm not disagreeing. But what I think is like it's interesting that they'll say that it's like the best asset ever, but yet it's so they think it's so immature that it's following, you know, like that it's going to top when M2 tops. Like, I mean, give it some credit, right? I mean, we get the stock market tops well before other metrics top, right? When the unemployment rate's going higher, the stock market bottoms before the unemployment rate peaks. So why would Bitcoin top after M2 tops? It doesn't make sense. Like markets are forward looking. So if you think Bitcoin is a great asset, which I agree with, give it some credit and assume that it actually can lead market. It can lead some of the macro data rather than lag it.
So Bitcoin as kind of like an alarm sign or so, something, some forward-looking metric to actually see what is going on in the market in the coming months and years.
Yeah, I mean, I think Bitcoin is generally leading, and other things lag behind. And I think one of the reason that it leads is because it's more closely tied to liquidity than the stock market and like index funds. And I think one of the reasons why index funds take longer, or the S&P 500 takes longer to sort of show that weakness, is because there's a lot of passive flows into 401ks and all that stuff. You have like, you know, your employer will match it. There's just a lot of passive money going into it. Whereas in crypto, there is passive money going into Bitcoin, but it's not nearly the same scale as what's going into something like the S&P 500. So because of that, I think that the weakness tends to show up in Bitcoin first.
So Bitcoin going down is showing kind of money tightness, if I got that right.
Bitcoin going down is showing that, like, yeah, like liquidity conditions are somewhat tight. We are and even in 2019, Bitcoin started to go down before the S&P 500. So I think Bitcoin is showing you where the S&P is going to eventually go. It just takes the S&P longer to get there.
Now, one thing that people are discussing heavily on, and you touched on it a little bit already, on the bottom for 2026, because there are people saying like, oh, 2026 will be awesome because of XYZ, and people say like, oh, it is a bear market, and I think it's you kind of have to call it a bear market. We crashed 50% down from the all-time high. It's kind of hard to now justify that it's a bull bear trap, or like it's just like a small correction. It's 50% crash. I feel like it's too big to not call it a bear market. But what are you kind of expecting for the remainder of 2026 and the coming years?
I mean, I think for the rest of 2026, Bitcoin will slowly drift downward. So you'll have some rallies that'll last for a few weeks, a few months, but ultimately, I think it will slowly go down. I could see Bitcoin bottoming as early as May if we get a big enough drop between now and then. But I think base case is going to be October until something like that happens. So I think that maybe Bitcoin will bottom later this year, like October timeframe, and then from there we will hopefully start, you know, like the next bull market. But I think it's premature to call for the low right now. Every bear market of the past in midterm years, we found a low in February, and then we found a local top in March. And then as we went into April and May and the summer, Bitcoin then went lower. So I think we're kind of in that brief window where you see a little bit of strength, but it's kind of pathetic. Like it's not that much strength. And then as the year goes on, we'll continue to drift lower. And I don't really fall for these narratives that people are putting out, you know, about, well, you know, MicroStrategy is buying this amount of Bitcoin, therefore it can't go down, or like look at the ETF flows. The problem is we had all that stuff last year too, and it didn't stop Bitcoin from dropping. So I don't really understand why those narratives are compelling to people when they could have said the same narrative 6 months ago and Bitcoin still dropped.
You said, I think, in the starting of the podcast, something around 40K being a significant marker, 40K being like something that if we drop there, some flags go off.
Yeah, I mean, I think if you go down that low, you'll see a lot of the traditional indicators start to signal. So I think at 40K, like I'm already not as bearish as I was back in Q4, because Bitcoin dropped 50%. If Bitcoin were to drop to 40K, then it might, I'm not saying it can't go lower. I just think it might be somewhat dangerous to be deterministically bearish at that point, or as deterministically bearish. So I was the most deterministically bearish in Q4. I'm still bearish, but I'm not as bearish. Like if Bitcoin's still trading at 60K by October, then I might just accept that it's the bottom. But I still think there's plenty of time for that weakness to present itself, which is why I do remain bearish on Bitcoin right now. Later this year, if Bitcoin's trading at 40K, I'm not saying it can't go lower. I don't think I would be as vocally bearish at that point. I probably would flip to neutral and then maybe even bullish as the year goes on.
Yeah, so for a 40K, I think I calculated once if we have the same drop from the last all-time high to the previous all-time high to the previous low, again, I think it would be around like 30 to 35K, if I remember that correctly. So like getting to 40K and under 40K would be kind of like a similar crash as we had it in 2022, was it? Where we crashed from the 69K to 16K, something like that, which would be significant. But I always tell people we can always go lower. Like we can always drop another 50%.
Yeah, I used to tell people that with altcoins back in prior bear markets. I'd be like, just because an alt's dropped 80% doesn't mean it can't drop another 80. Like that's what altcoins do best. So yeah, I mean, markets can always go lower, but over a long period of time, the bears sound smart, the bulls make money. It's okay to be bearish. Just I think it makes sense to probably flip away from being a bear. Maybe like later this year.
I love that saying. I've never heard that. The bears sound smart, the bulls make money.
And it's true. I mean, over long in a period of time, think about the richest people in the world. They're not short sellers, right? They're not the people that were like bearish on everything. So I think there's a lesson in that.
Yeah, and just as a small meme note, I would really love Bitcoin back at 58K, just for the 58K gang to the meme to come back.
Yeah, I mean, my guess is that it will happen at some point, but I mean, for now we're kind of in this. Normally in midterm years, around this time, Bitcoin's doing exactly what it's doing right now. It's just kind of going sideways and not really moving. And then as we get into late March, early April, that's when the market starts to drop again.
Actually, I've never asked that or researched that. Is there maybe it's just a meme and it doesn't have any like significance whatsoever, but is there actually some significance to some price points where Bitcoin just swings around one thing and always comes back to like 58K to 40K, 40K again to 58K, and like because it was a meme, or is it just like a meme that people are spreading?
Yeah, I don't really know how much relevance it is. I mean, I think that, the first low for Bitcoin was 80K back in November, and the next one was 60K. So it feels like it's trying to find support around some pretty major levels that it's found support at in the past. Even in 2018, when Bitcoin dropped, it found support at 6K, right? And it found support there for a while, and then eventually it dropped to 3K. So I think eventually, like, we'll see the markets go lower. But as far as the exact price, I couldn't say for sure. But I don't know if it's a meme or not. I more so look at, the drawdowns from the highs and assume we're going to have diminishing losses until proven otherwise.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. Awesome. We have one question to ask each and every one of my new guests on the podcast that have been on the first time. And the question is, what can we learn from you besides the whole Bitcoin ecosystem?
So I talk a lot about the business cycles too. And I think that's a really important part of understanding like how to weight your portfolio, like not just with Bitcoin, but with metals and stocks and bonds and everything else. So I think that's important. Again, my background's in nuclear engineering, so I could talk your ear off about nuclear engineering stuff. That's a completely different field than what we're talking about now, but I certainly could. But yeah, those are the main things. I mean, I do focus mostly on Bitcoin on the channel, but in midterm years, when we're in bear markets, normally it's actually better to pivot to other industries. And oftentimes in midterm years, Bitcoin bleeds to stocks, it bleeds to metals, and it bleeds to subsectors of stocks. Like, I mean, energy typically tops, or the energy sector typically does well, even when Bitcoin's dropping, like it did in 2022, and like it's kind of been doing recently as even the price of oil goes up. So I talk a lot more about macro events and how that can influence the markets too.
I had the nuclear Bitcoiner on, who talked about like how nuclear reactors or nuclear producers should mine Bitcoin and all of that. Is there any interesting connection for you to like from nuclear engineering to like Bitcoin that you kind of see?
The only thing I can think of is so my dissertation was on radiation damage in ceramics using molecular dynamics and in situ transmission electron microscopy. And one of the interesting things about radiation damage is like there's something called a primary knock-on atom, pKa, and it goes in to imagine like a crystal lattice. The atom goes into it, and it will it'll hit other atoms, right? So then those atoms will then hit other atoms, and then those atoms will hit other atoms. And then you basically get like a radiation damage cascade. Sometimes I've thought about how crypto is similar, because you'll have you'll have Bitcoin kind of going in, or one person talking about it, no one cares, but then that person influences someone else, and then they influence someone else, and then eventually you have this radiation damage cascade, but in this case you have a bubble, right? And everyone's talking about crypto and everyone's freaking out. But then after the cascade is over, and the energy sort of dissipates, what happens is oftentimes the crystal lattice does not return to its prior state. A lot of atoms are displaced, and then the structure becomes brittle, and then it's easier to break. So sometimes I think about that in terms of crypto, how when we have these major bubbles, it'll lead to all this euphoria and people going absolutely nuts for the price. And then we start to have a bear market, but then things don't really go back to how they were previously, because so many people have this are massively invested into things they shouldn't be interested in or invested in. And then it leads to this brittle environment where then something breaks. Like last cycle, it was FTX and Celsius. And so I've kind of made that connection before in a just kind of thinking about how things kind of shape up. I don't know. That's all I have.
That's interesting. I've understood about half of it, so the Bitcoin part of it. So my foundational layer of physics is probably not not good enough. But we have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you an interesting one because those are the two interesting things, at least in my world currently, Bitcoin and AI. And he asked you the question, what do you think is the impact of Bitcoin and AI long term on our society?
I mean, I could see a future where AI and crypto get more integrated. Um, there's already been there's already been people that have spun up websites where like AI agents are able to hire humans. I don't know if you saw any of those. But like a lot of people are talking about how AI will take our jobs, and I'm sure many jobs will be taken, but there also will likely be the creation of new jobs that we're not really thinking about. And that was one such example where all these AI agents needed to hire a human because the AI agents were tasked with things like, going to a restaurant and tasting the food and then providing a review. But the AI agent couldn't go do that, and the reviews didn't exist, so it needed someone to go do it for them. So I think like I could see a future where AI is using the crypto payment system, and sort of the on ramps and everything. I could see a future where, because of how seamlessly integrated transactions can be in the crypto space, where people just elect to use the crypto industry to make those payments rather than going through the traditional fiat system.
I mean, stable coins are kind of maybe also the bridge for that if they kind of want to use the fiat currencies, but just like on crypto rails.
Yeah, and I've said that for years. I mean, there's been so many people that have talked about, like using all these other random coins as a peer-to-peer currency. But the reason why that stuff never works is because if you're going to go spend money, you need to spend it. You spend it because you're convinced that the thing you're spending is going to be worth less tomorrow than it is today, right? Like we go out and spend fiat currency because we know it's going to be worth less tomorrow. But people don't want to go spend their Bitcoin because they are convinced, whether it happens or not, they're convinced that it will be worth more tomorrow than it is today. So that's why I don't really think that Bitcoin is going to be this like currency that everyone's using, or any cryptocurrency for that matter that's not a stablecoin, because people buy those currencies in the first place because they assume it's going to go up in value. And that's why ecosystems or economies work around inflation, because that way inflation, while it sucks, it does, like a deflationary currency would not incentivize spending because people would just want to hoard it because there's not more of it. But yeah, I do think we could see AI integrate more within the crypto industry, but I think that's going to take some time. I don't really think we're going to see that immediately. Maybe it'll be in the narrative for the next market cycle. I don't know. But it's not going to save us from the current bear market.
Super interesting. Thanks so much, Ben, for being on the podcast. Was fun talking with you and having a different perspective again on Bitcoin. Before I let you go, I mean, most people probably already know where to find you, but for the few people that haven't seen your stuff, where can people find you and reach out to you?
Yeah, so I have a YouTube channel, Benjamin Cowen. You can also search Into Cryptoverse on Twitter and find me. And then I have two websites, benjamincowen.com and intothecryptoverse.com.
Awesome. Then thank you so much, Ben, for being on. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.